Hello, everyone. It is Friday, so it is time for another episode of the Security Token Show. We got two this week because of the special announcement. I'm your host, Herwig Konings. You can also call me Happy, and I'm here to give you the latest and greatest in the RWA space. In fact, we have an amazing interview coming up with Shannon from Quarter Homes. But first, I do want to dive into a very interesting piece of news that we saw as a rumor that potentially the Trump family is getting into RWAs, which is, of course, a very interesting idea just because of everything related to the election, as well as their track record and influence within real estate, as well as their recent interest in DeFi and crypto. I believe it was either Eric or Donald Jr. Who actually tweeted saying they fell in love with DeFi and saying that they're on the verge of bringing something game-changing to the market, specifically in DeFi. But crypto sleuths, they get all the credit. You can't stop them. They have connected that tweet to a Steve Witkoff, a famous real estate developer that's in the Trump circles, that actually tweeted something very similar right around the same time on Tuesday. So could there be a link? Could they be tapping into their background within real estate and their love for DeFi to say, hey, let's bring real estate as a real world asset to the industry through DeFi? Man, that would be something cool for sure. I think that would send some waves to the industry, no matter how you think about it politically. It's definitely a charged project that would get a lot of interest. So I'm excited to see what comes out of this sort of rumor and announcement. Hopefully it is indeed RWAs. We'll have to find out. But for now, we've got an amazing show lined up for you. So let's head over to Jason and Shannon for an amazing interview.
Fantastic. This week we have another interview, this time with Shannon from Quarter. Shannon, how are you today?
Good. How are you, Jason?
Doing fantastic. Now, Quarter is a company that came into our radar recently. You guys are doing co-ownership and whatnot. Tell us a little bit about how it works and how real estate is being put on chain and what makes you guys a little bit different.
Yeah, so Quarter is really focused on the home ownership aspect of fractionalization of properties. So it's a little bit different than what you've seen in the past out there, simply because we have that spin on it. So we're a co-ownership platform, like you mentioned, that brings investors and homeowners both on title into a property. And the homeowner pays monthly fees to those investors for sole occupancy rights of the house, because both parties are on title. They would actually both have rights to that property. So we have an agreement basically where the investors sell their occupancy rights to the homeowner in lieu of a monthly fee. That monthly fee is about 50% less than a traditional mortgage in today's interest rates, and about 20 to 30% cheaper than market rents in the 13,000 zip codes in the US that we've run the model against. For the investor, their monthly payment is about on par with what they would expect for owning a rental property, managing it, and collecting that income. The cool thing is, because of how we've designed the product, the appreciation on the property is shared exactly pari passu. If you're the homeowner and you own 5% of the house, you're going to get 5% of the appreciation when it sells, and the investor is going to get the 95% that they have the investment in.
Got it. Interesting. So homeowners, essentially, it's harder to own a home. I mean, this is a way to kind of lower that monthly payment and also have other investors be able to essentially have passive income, right? Because they're not living in the home or managing it. They're more so participating and helping the occupant, be able to live there, if you will. Tell me a little bit about appreciation. How do you guys account for that? Because you do have investors now that what I would assume want some of that upside as well. So how do you guys account for appreciation?
Absolutely. Yeah. So with the Quarter model, we actually do an annual appreciation of every property on the platform. So we get internal pictures from the homeowner. We have an AVM or a appraisal that's getting run on the property to determine its value on an annual basis. And then we actually pull forward the appreciation for the investors through the issuance of what we call HPI tokens. So, if the property has gone up by $10,000 for your portion of it as an investor, we'll issue you $10,000 worth of these HPI tokens. And so you're getting that appreciation pulled forward. You don't have to wait for the homeowner to decide to move out. And that's actually basically issued against a pool of all appreciation on the platform. on all the houses. So it's no longer tied directly to your house. It's against the entire pool of houses. And then our goal is basically for those to be tradable assets that investors can go and trade on secondary markets. And basically, yeah, just pull for that appreciation and make it a easier, more liquid investment for them as well.
So to clarify, your what's going to be transactional on secondary markets, is it the appreciation tokens or the actual equity into these homes?
Yeah, it's a good question. So yeah, exactly. We do have two tokens, right? We have these HPI tokens, which are the appreciation tokens, and then we have tokens that are linked directly to each property for basically the initial investment, and then also granting those rights to the monthly cash flows and those appreciation tokens. I envision the HPI tokens really being the ones that are going to trade on other secondary markets. They're going to be a little bit higher velocity, things like that. The asset tokens, because each one is linked to an individual house, I imagine that those are a little bit more bespoke. We might create our own private marketplace where investors can come buy and trade in and out of positions in those properties.
Got it. Okay, so this is really interesting, and obviously I love that blockchain is being used. But at the same time, I do have to ask, how is this done in a traditional? If blockchain weren't a factor, how would this get done, if at all possible? And what is blockchain really enabling here?
Yeah, it's a great question. There is a few things I'll kind of talk about at a high level. First of all, it is possible to do this without the blockchain. It would be extremely cumbersome to do without the blockchain for a number of reasons. First of all, pulling forward the appreciation would be a real challenge. We could do it, right? You could issue securities that say you're entitled to this much equity in the property, but that's not really a tradable asset in today's world. So that's number one. Number two is that a lot of the interesting components of what's happening with the quarter model a lot of it's behind the scenes, right? So because of fractionalization and because of tokenization, we're actually able to basically bifurcate the monthly payments into a variety of different pools. So we have an entire risk pool that we've built within the quarter ecosystem. Part of the monthly payment that the homeowner is making goes into that risk pool every month. And that's designed to enable payment to investors in case of default on the consumer side. That's designed to help if there's major capital improvements that need to be made, say the roof on the house starts to fail after a year of moving in. We have a risk pool that's designed to basically help pay for that, so the homeowner who only owns 5, 10, 15% of the house isn't burdened with that huge cost. And fractionalization is really enabling us to be able to create those pools, funnel asset tokens, then HPI tokens, and then monthly payments into those pools, which is really cool. It's very, very cool. There's a lot of other pieces and parts that go into it. I'll give you one more example that I think is a really cool use case, that's we're able to do with Quarter because of the tokenization. There was a study that came out right after the 2008 housing crisis that came out from JP Morgan, who, JP Morgan had access to both deposit accounts for consumers and mortgages. They had issued mortgages as well. And they did this big study, and they came out and said, based on our data, if consumers had 4 months of house payments in their account, default rates would have gone down by 50%.
Wow.
Which would have been massive, right? So what we did, we read the study, we were like, okay, that's awesome, good to know. We actually built 4 months of payment into our consumers' required equity amount that they have to hold in the house. And so if at any time they have a qualifying life event, they can apply to get those 4 months of payments basically sold out of their equity. So we can liquidate those 4 months of payments out of their equity. They get 4 months worth of payments on their property, so they don't have to worry about making payments for 4 months. And we anticipate that will lower default rates, and that would not be possible. You could not create those types of programs without this tokenization and fractionalization, because now we can literally take a portion of their equity, send it over to the investors, and let them purchase it, trade it, buy it, all of those things.
Very cool. Really thorough answer. Love that it's research backed as well. So, you guys have done your homework which actually does a really good segue into the next portion that I wanted to cover today, which is traction and next steps for you guys. Tell me a little bit about, how many homes you guys have already tokenized, what's in the pipeline, and future plans for Quarter.
Yeah. So I'll start by saying we've done one pilot house so far. So it's been a lot of legal work on our end. We've been working with DLA Piper to really develop this model. We've actually been working with them for about 5 years now on the development of the model, the securities laws that go into it, the tax laws, the consumer protection laws, just making sure that everything is really not in the gray area. It's within the lines of what we can do today here in the US with co-ownership and with tokens. So there's been a lot of groundwork around that. We filed patents here in the US that have been awarded here and in Canada and South Korea and Japan. So lots of legal work. But now we're really excited to get into the actual physical, buying of houses and enabling of buying of houses. So we've done one pilot house that was really for the legal team to say, okay, check, yes, we can do it. We have all the documents we need. There weren't any hiccups in the road. And now we're actually going on to raise the first funds to do the first 300 houses on the platform. So we've launched a fundraise with tZERO for $147 million. That is going to be allocated kind of into two pools. 100 million of it is going to go towards housing capital. We expect that to be around 300 houses. And then 47 million is going to be going into operating capital. And in exchange for that, investors are getting a portion of the carry that Quarter holds on the appreciation. And so we're really excited. We just launched that in the last month or so, and starting to get some traction and starting to get excited to start boarding some houses.
Awesome. Congratulations. My understanding is that this is for accredited investors only. Yes. So go ahead and if you are accredited watching the show, go ahead and check out the offering on tZERO. Any last minute thoughts you want to share with us, Shannon, before we move on to the next segment of the show?
I think all I want to say is this: thank you for having me on. I think it's really cool to, be thinking about home ownership in this new way, to be thinking about all of what is being enabled by technology, and by this technology specifically. I think we're going to see a lot of new innovations in the finance space, and I think Quarter is really excited to be one of them.
Fantastic. Well, I appreciate you coming on, sharing this unique take on tokenization, blockchain use. And we're excited to see the progress you guys make with tZERO, as well as a platform yourselves and all the houses that will come on chain as well.
Thanks,
Shannon,
Jason.
thank you so much for coming on.
Great to meet you. Thanks. Bye.
Thank you, Shannon from Quarter Homes, for that insight. I absolutely love the co-ownership model, folks. It's another fascinating concept that can only be applied properly using tokenization, especially in this unique two-token structure presented by Quarter Homes. But beyond this awesome and new entrant to the market this year, we've got some news to cover, starting off with SBI in Japan. So SBI is one of the leading investment banks in the country and recently announced that their securities exchange, ODX, which has its Start Digital Securities arm, will soon list tokenized bonds alongside 3 other new tokens on top of the 3 real estate tokens they've already listed. So SBI's digital arm is worth mentioning that they also announced a partnership this week with Kyobo Bank out of Korea to focus on tokenization of RWAs in Europe and in Asia together. Props to SBI for putting together a heck of an ecosystem with partners abroad, outside of Japan, as well as having their whole tokenization infrastructure end-to-end now live and kicking. It's great to see. Next, we also saw Figure Markets officially launched. We've known they've been working on it a while. They're out of the US, so of course it makes things tricky, but they've done it, and they've started with BTC, ETH, and the native provenance token hash, which you can also get some discounts on, similar to what we've seen with some other sort of native tokens on other exchanges. So very cool to see that. It's an end-to-end platform that we all know will naturally eventually list RWAs, and it's dubbing itself the exchange for everything. So I think it's safe to say. Sticking on to the marketplace news, INX also announced a partnership with Siebert, a 50-year-old U.S. brokerage firm that will tap into their old school network to help bridge TradFi to INX's platform, which could imply some high-quality fund and asset managers might be heading over to INX. And I hate to cover the offerings, folks, that didn't work out, but it is my job. So here comes some bad news. dubbed the Bitcoin Hotel because the investment was into a construction bond for a Hilton hotel in El Salvador, the Bitcoin nation. I'm afraid to say that it did not succeed and has closed down. So Bitfinex Securities had announced this back in April, but they say it failed due to lack of investor appetite. Now, was this due to a lack of awareness for the offering, concern regarding construction bonds, perhaps the yield of the project? It's really hard to say what could have been the case, but we do look forward to Bitfinex's next offering as they learn more from this one. And we do have some developments from the active RWAs out there already. We heard from tokenization platform Stoker earlier this week about the success of their Bitcoin mining node with Blockstream. But this week, they also announced that they've been able to conform to MicroStrategy's recent stock split for Stoker's tokenized CMSTR product by also doing a 10-to-1 split, as they did in the traditional fashion. So it's pretty cool to see tokenized stocks mirror the actions of their traditional counterpart. Great job on Stoker for keeping up with that. And Franklin Templeton's Benji also made its way to yet another blockchain, announcing its expansion to Arbitrum officially. Previously, it was available on Stellar and Polygon, and now it kind of seems like no chain is safe from seeing Franklin Templeton bring its top quality tokenized money market fund to their ecosystem. So the strategy does seem to be working as it closes in on 500 million, now around 420, I believe, maybe more. We saw some fundraisers also go down this week with Zoff announcing a $4 million round out of Dubai. They're bringing 100 million RWAs on chain, they say, in the form of tokenized notes on the Liquid chain, a Bitcoin layer 2 that enables tokenization, definitely showing signs that the Bitcoin layer 2s are gaining adoption within RWAs. And another firm, Elements, without the E in the middle, also announced a $2 million pre-seed raise to help them tokenize commodities like oil and gas specifically. Makes me very happy seeing new entrants for new use cases with very successful financing rounds behind them. And this week, Tokeny also announced a partnership with Hex Trust for its custodial wallet infrastructure. I think that's obvious why they're supporting to enable Tokeny's infrastructure to grow. In fact, it's starting to look like Tokeny's partnership ecosystems is one of the biggest in the industry. And finally, it's worth mentioning that Brazil and Qatar are stepping up their RWA game. Brazil's securities regulator, the CVM, has sent out a letter to all tokenization companies inquiring exactly about what's been tokenized and how are those tokens classified. This could spell regulation coming or strengthening of enforcement coming to this jurisdiction. Meanwhile, despite the ban on digital assets in 2018, Qatar does note the value of tokenization, now including it in their 2030 roadmap, which is showing signs of regulatory support in this region. And to end our segment this week, I got to shout out Peter Gaffney's latest article in CoinDesk, where he talks about the conversation of the mortgage industry and capital markets converging thanks to the on-chain potential. And it's a great read for anyone that's exploring this topic. So with that, you now know all the RWA news of the week, and we can go ahead and move on with the show by picking a winner. And what a tough week to pick from all this amazing news. Love to see SBI really developing an incredible ecosystem and now having offerings live and growing. We saw some markets launch, some platforms raise capital. Quarter Homes is doing amazing things. It's really hard to pick, but I actually have to give it out to Franklin Templeton for their expansion of yet another chain to Arbitrum with their Benji product. Not only is Benji one of the largest and most recognized and most available, since it's retail, tokenized money market funds out there, but they're really playing into the crypto narrative, saying, hey, if you're building, in this space, specifically Arbitrum, I believe is like right up there with Base when it comes to transaction volume. They've really started to get some attention. So I think it's fantastic to see this. I got to give it to Franklin Templeton for really showing people how it's done, having a fantastic product, and then bringing it to multiple chains. This is what we've been saying on the show for years, that most security tokens, especially the big ones, will eventually all be multi-chain, and that's not a big deal at all, folks. Fortunately, this technology makes that really easy to manage, and it's really cool to see Franklin Templeton continuing to dominate with this strategy. So congratulations, FT or Benji. It's my company of the week. And of course, Kyle is not here again this week. Hopefully we have him back next week. I'm sure you're all missing him. I sure am. But meanwhile, of course, go to stm.co. We've got all the latest information, all the trading data that you're looking. If you want to know the current AUM of Benji, of any of the other products that are out there, we've got it for you. And we've got some amazing reports that came out this week. Be sure to look up the State of the Tokenization Industry 2024, the Year of the RWA report. We've got just about every issuance platform, marketplace, basically any provider and issuer active this year. You can go learn about what they're doing easily in that report. And of course, our monthly report regarding the activity in the secondary markets is again out now for July, since we're in August. So go check that out. And meanwhile, I hope to see you again next week on Friday, and happy tokenizing.